The Central Bank of Nigeria's Composite Purchasing Managers Index for November 2024 stood at 48.9 points, signaling a contraction in economic activities for the second consecutive month. The report reveals declines across key sectors, with notable differences in sectoral performance. The industry and services sector contracted in November, while the agricultural sector grew out of the 36 subsectors reviewed. 14 showed growth, led by transportation equipment. 22 subsectors experienced declines, with transportation and warehousing recording the sharpest contraction. The indices for output, new orders, employment, and stocks of raw materials were 49.6, 48.1, 49.0, 48.8 points, respectively, indicating an overall decline in economic activities. Supply delivery time also slowed, standing at 49.1 points. Output growth was observed in November with an index of 52.0 points. Very interesting figures here. Mr. Johnson Chukwu is the Group Chief Executive Officer of Cowrie Assets Management Limited. He joins me via Zoom to continue this conversation. Good afternoon, Mr. Chukwu. It's good to have you on the show.
Merry Christmas in advance.
Yes, compliments of the season indeed. I think we should start with this this PMI, CBN's PMI that has just been released and now puts us at 48.9 points. It's a contraction of most of the economic activities. How would you review this?
Well, it indicates, of course, like you rightly pointed out, it's actually indicated by a contraction in the confidence of purchasing managers to buy raw materials and other input materials. And it is not strange because even if you look at the GDP figure for the third quarter of this year, for the second quarter of this year, we saw a marginal growth in the manufacturing sector. Clearly, we know that the manufacturing sector is going through difficulties. A couple of factors that are very commonly and of common knowledge to all of us. One is that consumer demand has collapsed. We see weak purchasing power as a result of erosion of purchasing power by inflation. We also see increases in commodity prices as a result of pass-through effects of exchange rate devaluation. In addition to that, for the manufacturing sector, they are dealing with higher cost of funds and very difficult in accessing funds. You see most banks now have what they call primary lending rate or minimum lending rate in the region of 30-35%, which is impacting negatively on the sector that have a longer asset conversion cycle like the manufacturing sector. And these are the factors that are leading to purchasing managers' confidence to buy raw materials and input materials on the negative, on the decline, which is what is measured by the purchasing managers index.
Now, there is, let's move forward. Like I said, 36 subsector reviewed, 14 growth led by transportation, 22 subsectors experiencing declines. Now, the issue about the need for policy interventions, targeted policy interventions to stimulate growth, how do we go about this considering the ongoing reforms?
Well, the reforms are largely what you may call broad-based macroeconomic reforms. You are talking of targeted incentive or targeted interventions to stimulate sectorial growth. What we have seen in the recent past are some sectors, like we all know, have actually not enjoyed any specific incentive. If you take, for example, the telecommunications sector, I'm clearly aware that the telecommunications sector is going through some difficulties in terms of inability to increase their tariff, when the government has actually increased tariff on all government-dependent services, be it water supply, be it electricity supply, be it the price of fuel, energy cost. But at the same time, the telco sector is not able to increase their tariff because the government has refused to grant that. And that sector is actually bleeding. So you have other sectors. The other sector that you actually look at that ordinarily will enjoy government patronage, sectors like the construction sector. Yes, you may have seen improvement in terms of federal government contracts and a few state government, but I don't think that is pervasive among all the states. But if you actually rank the Nigerian economy in terms of share of the GDP, the telecommunications that I refer to is the largest, second largest contributor to the GDP. It's only second to the agricultural sector. And the agricultural sector, we know that the previous government had actually granted a lot of incentive, anchor borrower program, which seemed to have been lost in terms of inability to pay back. And that sector is going through major challenges related to insecurity, particularly in the food base of the country. Then second is the telecommunication, which I just mentioned now. Then you have the trade sector. The trade sector depends largely on one, consumer purchasing power, which I had mentioned has been eroded. It depends on availability of FX and the exchange rate. Those are all not in favor of that trade sector, and that's why you're also not seeing strong growth in the trade sector. After that, you now move to the sectors like the manufacturing sector. I read extensively on the manufacturing sector before you scale down further to the oil and gas sector. The oil and gas sector, the government is doing a number of things to improve crude production. But unfortunately, that is oscillating. We see improvement in this month and we see a decline in the next month because the core issues about share of the heart, about aligning or reconciling the expectations of the people who are in oil-bearing zones and the national interests have to be addressed so that they see crude production as critical for their own well-being and as well as improvement. So when we succeed in reconciling the interests of the nation in terms of national interests and interests of the people in the oil-bearing locations, we should be able to see a sustained increase in crude production. What I've done is I rank the sectors of the economy that the government, in its effort to incentivize sectors, should look at what sector contributes most and what sector have more pervasive impact on the economy. Agriculture sector, number one, followed by the telecommunication sector, followed by the trade sector, followed by the manufacturing sector, followed by the oil and gas sector, before you go now to the likes of construction sector, financial sector, and what have you.
So when we are talking support from government, fiscal and monetary side, having an handshake, we see the back and forth with regards to the proposed tax bill. And some will tell you that you need to dig deep into this document and see what really it's all about. What is your reaction to this? And do you think that this will bring in so much wanted support from the fiscal side to help complement the monetary at this time?
Well, so one of the things I've done is I've shared a way, if you call it, use that, if that's the right word to use, or I have sidestepped discussing the tax bill because it has become largely a political issue.
Yes.
No matter what you see, it will be viewed as a political position. So until the government goes back, the government has said, I think there are insinuation that the bill will be withdrawn, represented, or stuff like that. We are all waiting for it to become an economic discussion, and then we'll weigh in and express our objective economic opinion on whatever is the final bill that will go to the National Assembly. True.
All right, then, let's move on to Naira, that we see a bit of recovery earlier in the week. And many has been saying that, we could sustain this. So let me ask you if you think we can sustain that. What is the Apex Bank doing right at this time? Or what is making this happen? There seems to be a turn. Is it because of the season?
Well, the season, it could be a minor contributing factor. Mark the word I use, the adjective I use, minor, qualifying that is not a very significant factor. The couple of things the central bank had done. In the past 8 weeks, the central bank has issued treasury bills worth over 2.8 trillion naira. 2.7, 2.8 trillion naira. And that's treasury bills offers came at coupon rate, discount rate. 8 weeks ago, it was 22.9%, 9%. So it was 23%. Then we moved to the 2 weeks after that, it moved to 23.5%. Last 2 weeks, it was at 22.9%, 93%. And yesterday, I think it was at 22.8%. Those yield range are huge incentive for foreign portfolio investors to come into the market. So you may have seen close to equivalent of about 2.8 trillion naira come into this economy. So that clearly is in the region of more than $1.5 billion in the past 8 weeks, or past 2 months. In addition to that, there was a $2.2 billion Eurobond that the federal government raised. So these are factors that are stimulating cash flow, foreign currency cash flow into the economy, particularly the treasury bills auctions. This in addition to auctions of OMO, which at some point came at a discount rate of as high as 24%. So that's what driving the recovery we saw in the exchange rate. That is clearly a temporary measure. It's not sustainable. The federal government cannot continue to borrow that volumes at those yields, because effective yield of that is in the region of 30%. What will be sustainable is when we increase crude production on a sustainable basis, and then we have what we may call our operating cash flow that will meet the demands for FX. And then that's when we'll achieve stability in the exchange rate and possibly an appreciation of the local exchange, local currency exchange rate.
Taking that a step further, capital importation, we also saw that there was a decline with that. But my question really before we go there would be, we have the German team, the president, also in town, and many is talking about our continuous strive for bilateral relationship with other countries. What do you think this meeting or this deliberation around the world of business, what do you think it will bring to the table for both countries?
Well, for a start, for Nigeria, it gives the foreign leaders an opportunity for a first-hand assessment and understanding of the Nigerian economy, the Nigerian people, the Nigerian society, the issues around our country, and the opportunities available in this country. So it's no longer, some of the world leaders that are coming here will no longer see things purely from the premise of foreign journalists who are reporting Nigeria. And if their impression is positive, which we hope will be, then when they get back and they have a decision to make as it relates to encouraging their locals to invest in this country, they will positively speak well of the country. And so that's the beauty of it. When you visit a country, you have a first-hand experience of the country's hospitality like Nigerians. You have a first-hand experience of the prospects and the challenges in that economy. And then you are in a better position to properly and objectively speak about that economy. And that's the benefit that these foreign world leaders coming to this country will provide for us, or will avail us as a people.
But the task ahead of the Minister of Trade and Industry, many have also been talking about it. What do you think? What sort of conversations should she also be having, particularly with regards to trade facilitation at this time too?
You know, Tuli, I think the Minister of Trade and Investment should focus on how to remove the factor that discourages trade facilitation, issues around the bottlenecks and multiple agencies that are involved in clearing goods, the difficulties of exporting goods from the country. Of course, there is a lot of improvement on the ease of getting visiting visa to the country. The receptiveness of our borders, particularly the airports, how receptive they are, to how welcoming they are to foreign visitors. These are issues that act as unhygiene factor, that act as irritation to people who want to do business with us. If you have to bring in goods to this country and you have to take you multiple weeks to clear the goods, because of that, the shipping companies charge much higher for any call on our seaports or to our seaports than they will charge on calls to other neighboring African seaports. We need to address that. And I believe once we do those things, we should, particularly for Minister of Trade and Investment, we should be able to encourage a lot more trade activities between us and other countries. In terms of exports, I mentioned the issues that there are a couple of bottlenecks we encounter when we are trying to export goods from the country. Those things, the Minister of Trade and Investment should look at those toll gates. I use the word toll gates, those bottlenecks, and see the one that can be eliminated without compromising the security of the country and the economic effectiveness and efficiency of the country.
Now, the capital importation figures that you saw, Mr. Johnson Chukwu, that was on Friday from the NBS. I don't know how you will also react to that, because there was a bit of reduction too in that. What does that also mean moving forward?
Well, it simply means we've not solved some of our critical issues, which are the things we have been dwelling on in this conversation.
Yes.
And the focus will be the heavy lifting. Address the issues I've just itemized, and then investors will come into this economy. We are always in a hurry to say that, always eager to say that we have contributed a lot of potentials. But the reality is that those potentials, people have watched them for too long, and they are shifting their gaze elsewhere. which is why we've seen a lot of exits of people who have been long-time investors in this economy, and they are packing their bags and baggages and leaving. So we need to reverse that outflow of capital, and particularly long-term capital into this economy. They actually send a very negative signal to those who want to come to this economy, because the question you ask yourself is that if people who are here are living with their tails under their behind their legs or under their heads, in between their legs, why would you go and test to find out where they are living? So the government must do everything possible to discourage those who want to leave, or encourage those who are here to continue to be here, and that will send a positive signal to those who want to come in that there are still opportunities here and that they place a very good environment for investors.
Well, can we now do a projection despite this challenge? You know, we are moving into a new year, high energy prices, high cost of foreign exchange and all of that. But what's the outlook for you for considering what we've seen from maybe the IMF and the World Bank?
So the outlook will be largely dependent on what the fiscal authority does. There is a limit to the effectiveness of monetary tools if there is a fiscal vacuum or there's a fiscal lacuna. I think starting from the budget, the government has budgeted about 13.8 trillion naira as deficit for this next year. So how that deficit will be funded, how the revenue will be invested, and how early that investment or expenditure will be incurred are critical to what happens in the economy in terms of exchange rate movement, in terms of inflation rate, in terms of interest rate. The monetary authorities have largely been doing what you may call firefighting, trying to moderate challenges in the macroeconomic environment triggered by fiscal policy decisions. And we hope that the factors that have made the benefits of the reforms that the government has instituted in the past 1.5 years will be the focus of the government. There are obviously some factors that have made these policy transformations or policy initiatives of the government in terms of reforms not to have yielded the desired impact, or the negative, the side effect of those policies to actually be increasing instead of subsiding after almost 1.5 years.
Mr. Johnson Chukwamos, thank you so much for your time. Group CEO, Cowrie Assets Management Limited. It's always interesting having you on the program. Enjoy the rest of your day.
Thank you for having me.